Do you know that the one and only country, the US, can print money without any limit? For them, it's not just a green paper. Now the question is, why can't other countries do it? Also, who decides how much money a country can print? To know the whole story, let's know something about paper money. In ancient times, people used to trade through barter system. This is an example, he paying his yearly subscription by chicken. Another example of this system, white traders bartering with the Indians. But this system gradually vanished due to some practical challenges. They need something more efficient. Then the first form of currency came from commodity money, things like gold and silver as coins. This time also they faced challenges like gold security and carrying a huge amount of currency. At the time, the government intervened and told people that they could store their gold safely in exchange for a paper stamped with the government's authority to confirm the legitimacy and value of the written numbers. So the value of this paper money is $100, and in exchange for it, you will receive a certain value of goods and services. But that's not the ending. This time the problem was international. Every country has their own government, so they have their own currency. And this time also the solution was gold, because gold has value in every country. This was the foundation of the gold standard. So if a country exports something from another country, they need to have that much gold in their reserve so that they can pay them anytime. Under the gold standard, a country's currency was tied to a specific amount of gold. So if a country wanted to print more money, it had to have enough gold to back it up. That's why governments can't print unlimited money. What if a country print too much money during any crisis like recession or pandemic for helping people?
Here comes the demand-supply formula.
If the money supply increase, demand of a product will also increase because everyone will have money to buy the product, but supply of that product is limited and demand is high, then price will increase. In economy, this is called inflation. Imagine a spa center where people dream of getting a relaxing massage, believing that if they have enough money, they can someday enjoy the experience. Now, if a government distributes a large amount of money to everyone, many people will rush to the spa, expecting to indulge in a massage. However, when they arrive, they find a long line of people waiting. Due to the limited number of staff and resources, the spa can only serve limited customers at a time. As a result, the prices for the services increase, not only because of demand but also because the supply of available staff and appointments can't meet the influx of customers. Frustrated, the person may have to leave without the service, realizing that the money they have isn't enough to cover the inflated prices. This scenario illustrates how printing too much money can increase demand for services and goods like a spa treatment or anything else, but when supply can't keep up with demand, prices rise, and people may end up unable to access what they want, even though they have more money. So when a country prints too much money, it simply affects the terms of trade between money and goods, nothing else. This can lead to hyperinflation, where prices grow out of control. Zimbabwe's story is a perfect example. In 2008, they printed massive amounts of money to tackle their economic crisis. The result? A loaf of bread that cost $1 Zimbabwean dollar shot up to $231 million in just a year. Similarly, in 2018, the IMF reported that Venezuela's inflation rate reached nearly 1,000,000%. But here's the thing, while printing more money can cause problems for most countries, the United States is a little different. The US printed more money during the COVID-19 crisis to provide stimulus checks to citizens. While many blame this for inflation today, but the effects are nowhere near as extreme as those seen in Zimbabwe. Our story begins in the ruins of World War II. By 1944, the US, untouched by destruction, the US became an economic superpower, because they agreed that the United States would remain an outside influence unless directly threatened or attacked. Also, there is another thing called the Lend-Lease Act, enabled the US to supply weapons, equipment, and other resources to nations. By the end of the program in 1945, the US had provided about $50 billion. So end of World War II, the US held nearly 2/3 of the world's gold reserves, making it the logical choice for anchoring the global monetary system. As a result, in 1944 at the Bretton Woods Conference, the US dollar became the world's reserve currency, meaning many nations held dollars instead of gold. Also, countries trusted it, and global trade was mostly done using dollars. Under the gold standard, the US dollar was directly convertible to gold at a fixed rate of $35 per ounce. So in exchange of 31.1035 grams gold, the US will give $35, which you can use for trade with different countries. Most countries agreed to the Bretton Woods Agreement because it addressed urgent global economic challenges at the time and offered a cooperative framework for rebuilding and stabilizing economies after the devastation of World War II. Fast forward to the 1970s, the cracks appears in the gold standard visible. The Vietnam War and new government programs drained U.S. gold reserves, sparking doubt. The demand of dollar was very high when their gold reserve was not that much. So in 1971, President Nixon ended the gold standard. That means the dollar became fiat backed by trust, not gold. If U.S. have less gold or don't have any gold as reserve, they can still print money as much as they want, but you've to trust it that U.S. will not do it. The U.S. can print more money because the dollar is the world's main currency. Now the main question is, can the U.S. keep printing money forever? The U.S. can print money without the same immediate risks as other countries, but there are still limitations. For example, too much printed money can cause inflation, which decreases the buying power of money. But if inflation gets too high, it can hurt the economy. In the US, inflation is a natural part of the economy, but too much inflation can be harmful. For example, printing more money to stimulate an economy can cause price increases, but it doesn't create more goods or services. Also, the other nations from the globe will lose interest in dollar and they will not trust dollar anymore. This would weaken the dollar's position. Additionally, various institutions like the IMF and Federal Reserve systems regulate the money supply, preventing unchecked money printing. So, printing money isn't a magic solution for a weak economy.